Good morning, everyone. This is Marshall Giller bringing you the morning comment for February 24th. Commodity prices continued to decline yesterday. Most metals were lower and oil fell further. Even shipping costs for commodities are falling. People are starting to think that it's not just a matter of oversupply, but rather reduced demand, which is likely to last longer. Expectations of subdued demand for commodities is likely to depress the commodity currencies, the Australian dollar, the New Zealand dollar, and particularly the Canadian dollar, which has the largest energy component of the three. Today is the day of the central bankers. The spotlight will be on Fed Chair Janet Yellen's twice-a-year report on monetary policy to Congress and any hint about when the Fed will start to normalize policy. There's a contrast between the hawkish comments by various FOMC members since the last meeting and the dovish tones of the meeting minutes. Also, a contrast between the robust U.S. employment data and the disappointing results of a lot of other data. Market expectations are for a fairly balanced speech from Yellen without a major change in tone. Listening to what other FOMC officials have said, I think she could choose to downgrade the importance of the word patient as a warning to the markets that the market language may be changed in the March statement. That would probably be supportive of the dollar. In the UK, Bank of England Governor Mark Carney and other Monetary Policy Committee members testified to the Commons Treasury Committee. Last time Carney spoke, he said, quote, "The most likely next move in monetary policy is an increase in interest rates," unquote. Comments like that could be yet positive for sterling today. And later in the day, Bank of Canada Governor Stephen Polo speaks, followed by a press conference. His comments will be closely watched as they come just 2 weeks ahead of the bank's March meeting. People particularly want to hear if the Bank of Canada has revised its forecast for oil prices, and if so, what that implies for monetary policy. And we mustn't forget Greece. Greece last night submitted the draft of a package of new economic measures to its creditors. The Eurogroup of finance ministers will discuss the final version today on a conference call to see if they're satisfactory. If they are, then the package will be put to national parliaments for formal approval. The package must also be approved by Greece, of course, which could be difficult. There are no major economic indicators out from Europe today. In the U.S., we get the S&P Case-Shiller House Price Index for December, which is expected to have decelerated somewhat from November. The Richmond Fed Manufacturing Index, the Conference Board Consumer Index, and the preliminary market service sector PMI, all for February, are also to be released. These are likely to keep confidence up and the dollar supported. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX Global, wishing you solid trading.